people who maybe aren't following Australia or really don't care about Australia, here's a quick soundbite on maybe why you should care about Australia, and maybe it's why it's worth following. So Australia is in the midst of a almost without, I won't say completely unprecedented, but almost without precedent housing bubble. They are and have been living off the fat of the housing land, so to speak, really for the better part of the last 15 years. So to give you a pretty wild statistic, if you think about the U.S. back in really the go-go days of the housing bubble here, sort of circa 2004, 2005, 2006, consumers in the U.S. were pulling about 400 to 600 billion in home equity out of their homes per year, and using that for various consumption purposes. And that, by the way, amounted to around 4.5% of consumption. In Australia, the housing bubble is so large and has been going on for so long that Australians, for really the better part of the last decade and a half, have been pulling anywhere from 10 to 15% of their consumption out of their homes per year, like I said, for the last decade and a half. So Australia is almost, we call it Oz, others do as well, obviously, but almost unbelievable what's going on down there, and has been going on down there for a long time. So, debt to disposable income, is it sustainable? In my mind, there is far too much debt on the balance sheet in Australia at the household level, and disposable income is not going to be able to support it. And interestingly, about 2 weeks ago, there was a survey that came out. There's a small bank in Australia called Members Equity Bank, ME or Me Bank, which does a biannual survey of Australian citizens' households. About 1,500 of them, surveys them by phone and asks them various questions around the state of their financial condition. And really interestingly, this June survey they conducted just 2 months ago, they asked whether Australian households would be able to meet their minimum debt obligation payments in the coming 6 to 12 months. And the percentage of respondents who said that they would not be able to meet those payments essentially doubled. It went from 5% in the December of 2015 survey to 10% in the June of 2016 survey. And maybe even more specifically, the percentage of respondents who said they'd be unable to make their minimum payments on their mortgages rose from just 2% at the end of 2015 all the way up to 8% in June of 2016. So very interesting things happening in Australia. You've got really a powder keg sitting next to a set of fireworks sitting next to a bunch of butane. So anyway, I think that's a really interesting market. We've done a ton of work there, and anybody interested can let sales at Hedgeye know.